Alrighty, so it's roughly about 2 minutes into the session for London Open. Looks like we've created this massive, sell side imbalance, buy side inefficiency. This massive imbalance here, right? We've just taken out this sell side too by a tick. For me, that's like an extremely big displacement to the downside, in my opinion. Now, in terms of rating liquidity, there's still these equal highs left over. Would I be interested in taking a trade right now? Potentially, if we can return all the way up here, I would be interested in taking a short position to target the consequent encroachment of a 4-hour imbalance. So I'm going to set a limit order to the bottom of this breaker block. So 16782 with my stop loss above this high here, 16787.25. 16782, and we'll make that a sell. Now I don't want to be risking $1,000, so I'll be doing 5 contracts and I'll be risking 0.5%. I'd be happy to do that, right? I'd be happy to execute this trade. Now, why would I be happy to execute this trade? So firstly, on the 4-hour time frame, if I just get this up for you as well, there's this fair value gap here on the 4-hour time frame. I want to see price dig into this fair value gap just a little bit more, right? Just a little bit more. That's what I'd like to see. That's the first thing. So if I mark that out, there's your consequent encroachment. And the only thing that could kind of change my idea here is if price starts to show willingness to go up, or if we reach the consequent encroachment before my sell limit gets tagged. If either of those two things happen, then I'll rethink my idea and I'll rethink my bias. So at this point, I'll set my limit order. And, what I'm going to do, I'm just going to get rid of that for a second. And I'm going to make sure I set a take profit. So I'm just going to do it again. Limit order from this breaker block, 16782. Stop loss about here, 16787. That's risking exactly that. And then take profit, we'd make that, down here at consequent encroachment. So let's have a look, 16762. Something like that, right? Give or take. So I'll be placing that limit. That's what I'm looking for. Now I can always change this, right? I can always change it if I want to. Just looking at the price at the minute, this here is the breaker block, that candle there. So that's classed as a breaker block. It's the last down close candle in between these two highs, one of which raised the other, right? So that's kind of what I see. We've taken out this liquidity, we're moving down, we're trending down overall, so we're going with a larger time frame analysis. And I believe what I want to see is for us to return here, reject, and then move lower. Tap into this zone, and then, and only then, maybe we can progress higher, because we just had a massive move to the upside. A retracement is due to happen, right? So I'm trusting that we're going to get tagged into this breaker block for an entry. Right, that's what we're looking for. If we don't get tagged into this breaker block, then it's completely fine, right? So what I'm going to do is I'm going to add in 1 contract here with my stop loss at that position, right? Just seeing how this candle closes, 16787, which is $185. We're just going to see how this candle closes first. And what I might do is actually measure out just, the consequent encroachment of this fair value gap here, right? So we're going to see how we react at this level. Because right now it could be an institutional order flow entry drill, so I'm just preparing for that situation. Stop loss above this candle would be 16786. And we're just seeing, right? We're just seeing if we want to execute manually, we can. But we'll see if we can tap back into this breaker. Stop loss has come or has been put above this candle here, which is an order block. Right, so what we're going to do is we're entering with 5 contracts now. That's our stop loss there. And then we're going to ride another 5 contracts again if we tap into this zone. But if we don't, that'll just mean that price is extremely bearish. So if we break past this swing low here, where are we? So if we break past this swing low, then price might just be extremely bearish. We can tap back into this breaker. That's like completely fine. It's completely permissible. So just seeing how price reacts now and that busy, that's all we're doing. That there's our breaker block, so let's highlight that. And I'm just going to get on my executions, that's it. Just so you can see. Right, so that was my execution. A little bit low. I did want to get tagged in the actual, the actual fair value gap. I'll make that red. So we've got a SIBI. I'm not really too interested in the consequent encroachment at this point. I'm just interested in the SIBI and interested in the breaker block, right? So I'd like that breaker block to hold. That's what I'd like to happen. So if we do get tagged in, then that would be nice, of course. If this breaker block holds, that would be nice. And then obviously there's this order block here too. So there's an order block here too, which is a bearish order block, right? So that's what I'm seeing. And now we just wait for price to do its thing. So if price comes up, I'd like that order block to hold price. That's why my stop loss has been placed there above that green candle. The breaker block should be a strong PDRA if we're going to go lower. And I don't trust this. Like this run up, I don't trust this as price is going to go higher. I don't trust that at all. Like these green candles, it wants to get somewhere quickly. And my idea is that it wants to get to this breaker block quickly before then reversing to the downside. If that's our take profit level, it depends how many contracts we're in with, right? But we've just been tagged into those two positions. So we're going to set one buy limit down here at this low. So we're going to set a buy limit at 16772.25, right? Buy limit, and then we're going to have the other buy limit a bit lower. So we're going to have two buy limits on this trade here, as you can see. Again, we want that breaker block to hold and the order block to hold. So I might just get rid of everything and just leave these here. This is what's important for me. You can see the entry. So we've got 4 and then one contract there, which is interesting. Also, the way I view this, so this high here, let me just get it up for you too. This high, if I just draw like an arch, you could call it, or an arc. This high here, I class as a failure swing. So what I'm going to mark out here, might draw like a rectangle, and then I'll shift it over. This high here, I'd class as a failure swing. So I want to see that hold as a failure swing too. And I want to see price reject from this breaker block. So I'm just going to make a text box here. I'm going to label this as a failure swing. And we'll make this a little bit smaller just so I can fit it on the screen. So I class that as a failure swing. I want to see that hold as a failure swing. Technically, this candle now, right, could be a mitigation block here. But you got a breaker block too, right? So that's what I want to see happen. In terms of my stop loss, overall stop loss, we could move these stops, to the same point, give or take. But again, that's what I want to see. I want to see price now move down. That's exactly what I'm looking for over the next few candles. 2 buy limits set. This stop's going to be moved now at the same position. That breaker block, if you have a look at it, we just tapped into the wick. Right? It is permissible for the price to come higher. Don't get me wrong. It can come higher, but what I'd like to see now is a move a bit lower. And if I just look at my risk to reward now, if you get a short position up, like this, 1-to-1 risk to reward is roughly about here. So where my buy limit is, it's just over 1-to-1 risk to reward, give or take, for those 5 contracts. And then these other 5, I'm happy to ride those a little bit further. So it all depends on how many contracts. I mean, this is quite a heavy load. That's like a 2.84, give or take, right? So that's what I'm kind of after. First take profit, obviously. And just because of, not commissions and spreads, but just because of how it works, I'm going to put that just above these levels, right? Again, this second take profit level is the consequent encroachment of a 4-hour fair value gap. I want to see price dig into that. I really want to see price dig into that. We're respecting this bearish fair value gap. We're respecting this breaker block. We've got a failure swing here. That's what we have taken out liquidity here, and then internal liquidity again. So what I'd like to see now with price is I'd like to see price move lower. And if I just zoom through the different time frames, there's no imbalances here. So if we are going to move lower, it should happen. On the 1 minute, there is one imbalance, which you can see down here. From this candle's high to this candle's low, there's an imbalance right there. So I want to see price trade through that imbalance. Again, this is quite a large candle, right? Quite a large candle displacement. We can again go back into this breaker block. That's completely permissible. But I'd like to see a run lower. The order block's there to support price. That's where the stop loss is placed above. And we're just watching price now. That's all we're doing. This line here, I don't think that's relevant for us. And what I'm going to do now is just mark out any, I guess, short-term or internal swing lows that I want to see broken. And that there is the first one I want to see broken. A swing low, what characterizes a swing low is when you have a candle that's low is lower than this one and this one. So this candle's low is lower than this candle's low and this candle's low. That makes that a swing low. So seeing swing lows broken is a good sign. That's what you want to see with price. And you might be able to see here there's a liquidity void, a complete void in liquidity. From this candle's high to this candle's low, I want to see that completely broken through, like this liquidity void. And I potentially want to see that used as an inverse liquidity void. So, and then I want price potentially to come back up. Now I want bodies to close below here. A couple of people have asked me about market structure shifts. Do they have to have bodies closing below? Not technically, right? But bodies indicate stronger price action. So this here is a liquidity void. So I'm just going to label it liquidity void, because notice how there's no trading in that zone, right? There's a void in liquidity. So I want price to use that. If it doesn't use that, then I'm monitoring the price here, this price action. There's no imbalance here that it could be bouncing off, right? So that's what I'm relying on. When we get into this zone, the stop loss, the stop loss now technically could be reduced as well. But especially when we get into this zone, the stop loss will be like managed and mitigated, because if we are going to go higher, then this could be accumulation, manipulation, and distribution. But I still believe lower prices are going to happen because of the setup I've seen here and because of the fact that we've been bullish all of yesterday. So that's what I'm kind of seeing at this stage. So stops are going to be moved above this candle at this point, right? So we're going to manage our risk. So as we keep taking targets, we're going to manage our risk and mitigate our risk. That's really, really important to keep in mind. We're just reading price action at this point. Right? We're just reading price action. These, I guess, two candles before I move down, they're also an order block. You want to see changes in the state of delivery. What would really indicate a change in the state of delivery for this move would be if all these green candles were disrespected and we hit our first TP level. Right? That would be the true change in the state of delivery. But now we're just watching price. So I do like how we traded back into that liquidity void and then we rejected from that. Well, I do like that. So we're going to see if that kind of holds here. I'm just going to change the text, make it a little smaller, because I want to be able to see that as we're kind of in the trade. But there's this fair value gap here, which I'm keeping my eyes on. So, once I'm in a trade, that's how I'm kind of managing risk. A lot of people have asked about risk management. I start with my stop loss at a certain position, and then as the trade progresses, I manage my risk or mitigate my risk. Because if I lose the trade, which could happen, completely possible, then I want to make sure I'm not losing as much. You get what I'm trying to say? So there's always ways to manage or mitigate risk, and you've got to manage that yourself. And we'll just see what happens with the trade. I'll feel more comfortable if we close past this busy. Until then, nothing is set in stone. Obviously, 2 entries up here, 1 entry down here, completely off guard. That was meant to be inside this bearish fair value gap. So now I'm just watching price. So do we find support, resistance around the liquidity void? Do we want to come back into this breaker again? That's what I'm watching with price, right? And then again, what I do, so that's a swing low. That was interesting for me. I'll mark out this. Now it's not really a swing low, but technically 2 relative equal low candles. I'm just watching price to see if we can break these points. That's all I'm looking at. I don't want price to find support here, because then we could be actually moving higher. So I want price to close or keep closing below this liquidity void. That's what I want, right? That would be like efficiently delivered price action. Every day the market's different. Every day the market does different things in terms of how efficiently it delivers. So that's something that, I'm mindful of as well. And again, I'm just mitigating my risk. So what you want to see in these types of situations is, yes, it can come back up in this liquidity void and find some kind of resistance there, but you want to see a move down. You want to see these green candles disrespected, because that indicates continual changes in the state of delivery. And then if we do come and tap into this busy, then my risk will be reduced even further. If is the key thing. So yeah, at this point, if I'm in a trade and I'm just watching the price, I'll just let it do its thing. You know what I mean? I'm not too concerned with what happens. The analysis has been done. You stick to your analysis. If you're wrong, you're wrong. Now, what I'll be looking to target if this trade doesn't work, I'll be waiting for this buy side liquidity to be taken, and then I'll be looking for a short. But until that point, it is what it is. I'm just watching price action at this point. But we want to see price action deliver lower. So the first I guess you could say the first sign that it might continue lower, you measure this wick. So ICT treats wicks as fair value gaps, and you want price to trade below 50% of that wick. That's what you'd want, right? So that's like an initial kind of thing that you could look for. It's not the be all and end all, right? Just because it might close below 50% or doesn't mean it's going to go one way or the other. But I look for these price signatures as I'm in a move that could, strengthen the idea that, the price is going to head in my favor. And I stick to the bias until I either get stopped out or it hits my take profit. That's it. I stick to my bias. I stay strong with it, and I just watch price action. So again, just going through why we're taking that trade, we've rated some buy side liquidity here, right? We've had a clear shift in structure. We've been bearish. We've just taken out that swing low, but I don't see that as a raid. I don't think that's a raid, in my opinion, right? We're already in a daily fair value gap, right? We've just had a massive run up yesterday. I feel like we're going to leave that buy side liquidity till later. So I feel like we're going to go down first and then go higher. That's what I'm anticipating in this move. And there's a 4-hour fair value gap below that I feel like we're going to fill as well, right? So that's kind of what I'm thinking at this point, right? So that's the kind of move I'm thinking about. These 2 lows, they're very close together, right? And that's what I'm anticipating. So I'm just watching price at the minute. Again, here's my entries. You can see 4 contracts there, 1 contract there. You've got an entry here too. Not the best. Of course, could have got a better entry. I just wanted to make sure I got in the move. So there's 2 lots of 5 contracts in this position. We're spending a lot of time in that liquidity void. A lot of time, right? So I really want to see price, if we accumulate here, I really want to see price move lower first. That's what I'd like to see. At least to this busy, and then my risk can be mitigated. But at this point, I'd like that to hold as resistance. That's what I'd like to see. And again, I've got this wick measured. There's your breaker block. Stop loss has already been moved. And we're playing around with that liquidity void. That's what we're playing around with. We traded past it. It might use this as an inverse liquidity void. It's like an inversion fair value gap. Like, say there was a bullish gap, you disrespect it and then trade back into it. It's like an inverse. But in this case, it's like a liquidity void. So ICT says that all PD rays can be used as inverse. Order blocks can be used as inverse, etc., etc., etc. Fair value gaps, breaker blocks. So it can all be used as inverse. So now my stop losses are going to get managed, right, and mitigated. Because if I'm wrong, this is going to use the fair value gap as, as some kind of support. So now my stops have been moved there. You can see this. I'll leave that there for you guys. I'm not taking partials now. There's no point, right? 5 contracts will be taken off at that swing low. Right, now what would be nice is if this candle broke below that busy, or if the next one did. When you're using fair value gaps, you measure out the consequent encroachment level, and you see how price closes. Again, it's not the be all and end all, but generally speaking, if price closes below 50%, you're probably going to go lower. Generally speaking, right? And these stop losses, right? Again, sometimes I do 2 ticks. I'm just going to move them above this candle here, right? That's completely fine. So 1.5 lot there. I think there's another one on top there. I'm not too sure, but we'll leave it there for now, right? So we're just about to get tagged in our first take profit level, as you can see. So hopefully this next candle kind of delivers for us. So we're going to leave that there for now. But yeah, I thought I'd do some kind of like live tape reading and go through like my executions just so you can see. So that's one taken. I don't need that anymore. Doesn't matter, happens here. So I'm going to set another buy limit. I might buy back like 1 or 2 more contracts, and I might leave like a runner of 3, right? So I'm going to leave a runner of 3 contracts. So let's get rid of this. Let's get rid of that. And we're just going to set a limit. I'm going to manually execute this, right? So you can see what's happened here. We're just taking out that swing low. What will determine if I hold on to a run or not is how we react from this zone, right? So I'm happy to close the trade manually as well. But just so you guys can see, 1 trade executed here, but then these 2 are really good risk to reward trades. So if you have a look at that one, if you get your, say your position, where I entered, say from here, and my stop loss, I believe, was above this high, somewhere like that, take profit. It's about a 1 to 2 risk to reward if you have a look, which is usually what I aim for anyway, right? It's usually what I aim for. So now we're just watching price. Again, that busy's been disrespected. It's permissible, like completely permissible for price to trade back into this and use this as an inversion fair value gap. Like, it's completely permissible. If it doesn't, then price is just extremely bearish. So with me, if we're going to run, like if we're going to really run to that 4-hour imbalance, which I'm going to mark that out anyway, just so you can see it. But if we're going to run to consequent encroachment of that 4-hour imbalance, which I'm going to mark out, then that'll be my final take profit level, right? If we're not, then it doesn't matter, right? So I'm just going to highlight the 0.5 level. That's what I'm going to have here. And then the rest, we're just going to zoom in just so you can see. So just to recap that, we took out this swing high, right? It's not Asian liquidity. We just took out a swing high, which is one of the examples I talked about in my masterclass. We had a market structure shift. We've been heavily bullish over yesterday. There has to be some kind of correction, in my belief. And this is scalping too. This is scalping. We've had a market structure shift here. Yes, we broke past this swing low, but not enough, in my opinion. Then we retraced back up into this breaker block, right? One of my entries was meant to come from this civvy. It came just below. The other 2 came from the breaker block. Now, that breaker block actually rests. If I grab this whole, swing move, or even this one here from this swing low, right, let me get this up to this swing high at the very top. If I grab that up, that breaker block rests above equilibrium. Let me just get this up. So we got this swing high here, right? And this swing low. So notice that breaker block rests in the optimal trade entry range from 0.618 to 0.786. that's another reason why I entered there. The reason why I entered here as well with 5 contracts is because price action gave us a massive shift in structure. So it doesn't necessarily need to return to that zone, if that makes sense. If price is heavily bearish, it could leave the breaker block, just tap into here as an institutional order flow entry drill and then continue to sell off. So I still wanted to be a part of the move. That was a mistake right on my end. I should have waited for this breaker block entry, but I thought I'd go in with those contracts there. So a word of improvement, looking back at that initial trade, initial entry would be to wait for the breaker block, which I did on the second occurrence. So that's what I'm kind of working with. At this stage, I'm in the trade and I'm happy to hold it for a little bit longer. We didn't actually return to that inversion, which is interesting. Now, one or two things I'm anticipating to happen, right? Well, there's 3 possibilities. We accumulate and we expand. We accumulate, return, and expand. Accumulate, return to this CB, and then expand. Or, right, if we're completely wrong, then we accumulate and we just displace to the upside. So what I do in this position is I come up with a range of scenarios that could happen, what I class as permissible and not permissible, because you got to have limits, right? For me, there's no stop loss set because I'm going to manually close it. I just want to watch price in terms of how it's going. But here is a CB. Now, this CB, let me just make this black and then back to red. This CB overlaps the inverse fair value gap, so it's completely permissible for price to actually come up and return to that zone. It doesn't have to, but it can. So we're going to see if we can get some kind of expansion here to the downside, right? And I'm going to go to the 5-minute time frame just to kind of have a look, right? This last rate of liquidity, that's the last rate of liquidity. You could use the standard deviation projection to go lower from here. That could be the case too, right? So you can see that. But that's the expansion I like to see. I want to see some kind of expansion. So that's what I'm looking for. And if we get a little bit more of an expansion, I'll buy back one more unit, right? So I'll buy back one more. And now I'm only with 2 contracts, as you can see, right? So I'm just working with price, right? Again, here's going to be the final TP level. So I might just draw like a line here, and that's consequent encroachment of the 4-hour fair value gap. So I'm just going to draw a line here. Make that a bit bigger. I'm going to highlight that for you guys too. So that's the TP level. If you like these types of videos, let me know. I guess it's live trading. My thought process as I'm going through, you saw the mistake I made today. I entered a little bit too early. That's my mistake. Completely, own up to that. But these things happen, right? So here's the TP level. We're going to remove the final 2 contracts there. It just depends how price trades through it. So we're going to get ready and we're going to manually execute if it wants to get us there, right? If not, right, we wait and we hold on to price and we let it do its thing, right? So we're just going to watch price and let it do its thing at this point. If we get one more expansion, I'm happy to sell another contract maybe somewhere down here. I'd like to see that. If we get one more expansion. So we'll see what happens with this candle. So we're going to actually buy back one more in just a second. And then we're going to leave one runner. There we go. Cool. Nice and simple, one runner. So just have a look at those executions there. You've got 5 contracts here, 2 contracts there. You've got another 1 contract here and another 1 contract there. Now 10 it's extremely heavy. Up to you, up to your trading strategy and up to your trading style. If you're scalping, risk to reward, etc., etc. But that's what I did. And again, you can see those entries. Now, as the price is like moving down, I'm watching to see if we respect like bearish PD arrays. If we start disrespecting things, then I'm not really all for it. You know what I mean? Like good price action would respect all these things, right? It is permissible for price to return here, but it should keep going down. If it's really, really bearish, it should use this CB and go lower. If it's, looking bearish, but not so much, it might return here first. So that's how you read price. And then every fair value gap, I get my Fibonacci tool out, every single fair value gap, and I do this. So if you're wondering how I do that, I'll just measure the halfway point. That's it. I just watch how price reacts. It'd be beautiful if you react here from the 0.5 and then head lower. That would be like perfect algorithmic price delivery. And for me, that would make me extremely comfortable to hold to the TP level if we can displace lower. If we don't like this, then I'm watching the inversion fair value gap and the SIBI to see if we hold, right? So it just depends what price wants to give me. It's currently 6:33 in Australia if you look at the top on the clock here. So, half an hour into London Open. Usually for me, what I do is I look at the charts, just before London Open. And then if I see an opportunity, then I take it, right? I take it. The thing with this now is that we've disrespected that SIBI, right? We've disrespected that SIBI. So what I do now is I get rid of that. I potentially treat this as an inversion, right? And I see how price reacts. There's an order block here, this green candle. I'm just watching price action, right? I switch between different time frames to see if there could be anything I'm missing. And I just see, does price use this as support, right? Or do we continue lower? That's what I'm looking for. So that's your failure swing. Again, that's what I was anticipating to hold. I didn't catch this move down. That was the massive move down. I caught this next move down from here, right? Working our way down to take out sell side liquidity. That's what I caught, right? So you can kind of see what's going on. On a 5-minute chart, just going to have a bit of a look. Yeah, we still got that buy side liquidity target. That's resting there in my opinion. But we are progressively moving down now. And if I get on a smaller time frame, so the 2-minute, you can mark out different quarters. So there's a quarter that starts at 1:30. So 1:30. And there's one that starts at 12. So from 12 to 1:30, there was like accumulation here if you're using the quarterly theory. So you can apply that if you want to, but that could be used as an inversion fair value gap. But this, I guess, is, you could call this scalping because, I was in the trade here and then 2 more positions here when I got filled. But you could call this scalping. It's from here, let's say, I started at 206. My first TP was 224. It's about 30 minutes max, most of the trades. Yeah, I could have just gone for a fixed risk reward if I, didn't enter this position and I just entered here. I could have just gone for a 1 to 2. That would have gone all right. So let's have a look at how that looks. If I entered from here and had my stop loss there, we could have just gone for a 1 to 2. That's completely permissible. Like past this swing low. So it's up to you guys. And partials do pay. There have been instances for me where I've tried to go for a fixed 1 to 2 and it goes to about a 1 to 1.8. And I could have taken partials, but instead I don't. And it ends up stopping me a break even. But it's just a part of the game. Like at the end of the day, you decide how you manage your risk. You know your personality better than anyone. So, you got to make that happen. And again, up to you completely how you manage it. All right, so we're back with the second part of this recording. So I'm going to actually set a buy stop here. I'm going to put it above this green candle. So that's going to cover costs. Regardless of what happens, it's either I lose one contract or we hit our TP. I'm going to set a buy stop here, 16780. Right, we're going to set that there. The reason I'm doing this now, and I'm just going to move this a little bit higher, is because we just disrespected this bearish gap. So price, if it wants to, could use this and find support here and then go to the upside. And I obviously want to have a stop loss so I can manage that risk. My buy limit is going to be set at this TP level. Now, this TP level is the consequent encroachment of a 4-hour fair value gap. Again, the reasoning for entering this trade was that we've been extremely bullish. We've just tapped into a daily fair value gap. And, we've just swept a level of buy side liquidity. And we had a clear market structure shift and a fair value gap and a breaker block that lined up with that fair value gap, which is like a unicorn model entry setup. This is like a scalp. Again, this is not a silver bullet trade, but it's a London Open trade. So London Open is from 2 to 5 a.m. Silver bullet is from 3 to 4 a.m. New York time. If you're in Australia from Sydney, you'll have similar times to me. So right now it's 6:30, right? Give or take, you can see at the top. And this is like 30 minutes, 20 minutes before, silver bullet. Again, like I've said, I kind of look at the charts right on London Open, see if I can catch a quick scalp. If I can't, then I wait till silver bullet and I anticipate that something happens there. So what happens here now could be completely different to what happens after. The price could go back up and continue back up, but I just take those small trades, right? Decent risk to rewards, small trades, take off those contracts and then watch the price. Once, I'm at 1 to 1, I go roughly break even. Roughly, give or take. You've kind of seen how I manage my stop loss, but let me just get this fixed first. So we'll go 16761. 0.75. And we'll just place that there. So whatever happens, right? Stop loss is so far above. I'm potentially treating this as an inversion fair value gap. I don't want to see it used as that, but it could. And if that's the case, then I'd expect this inverse and this CB to hold. If they don't, then I get stopped out and it's all good, right? So that's kind of what's happening here. Bit of a longer video now. So we'll just see what happens with price. I anticipate a lot of, volatility in the markets in 20 minutes when Silver Bullet starts. So that's kind of what I'm looking for. And just going to watch price and keep doing what I'm doing. And I'll keep recording for you guys so you can kind of hear my thoughts. But yeah, I don't want to see this used as an inverse. I put my stop loss in a position where I'm not going to be afraid with what's happening here. If I had my stop loss just above this high here, I'd be freaking out. Oh, he's going to hit my stop. Have your stop loss in a position that makes sense, right? I move my stop loss when it makes sense. Like you saw here, like when price came back down and tapped in this bullish gap, I move my stop loss above these candles here. Like I managed my risk. It was pretty much like break even at that point, because if I was wrong, then that's the place where price would reverse. So do it where it makes sense for you, right? Do it where it makes sense for you. And again, we're just watching price to see what happens, right? About 19 minutes until we enter Silver Bullet. So this video will be uploaded today ideally, and then I'm going to upload the other video reviewing yesterday's trade a bit later on. But yeah, this is a really nice trade, a really solid trade. Again, this is the only error that I made here, that entry. But these 2 points, that's the entry you want, right? Breaker block, fair value gap, order block, which supports price. So you've got multiple PD arrays that should support price. And you've got a really drastic market structure shift, right, which is good. So that's what I'm looking at. And obviously a failure swing here. Might change the color of that to, say, we'll go pink, right? So that's your failure swing, just so you know. If you want to take a screenshot, you're welcome to. That's completely fine. Our TP level again, just for those that might have missed it. So on a higher time frame, we return to this 4-hour fair value gap here just by a wick. And then if you look at this 4-hour fair value gap, from this candle's high to this candle's low, that TP level is at consequent encroachment. Because there's all these other fair value gaps here. So I'm only targeting this top one and the halfway point or the midway point of that. So that's what I used as a take profit, right, for this example. The first was the low-hanging fruit. So low-hanging fruit is just the next swing low, next swing high, and that was this one, right? So that's where I took off 5 and then 7 out of 10. Then I took off another one down here and another one down here, right? So I took off 2 more contracts, leaving one in as a runner, right? Leaving one in as a runner. If you're only in with 2 contracts or 1 contract, which is completely fine, I'll just go for a fixed to reward. Risk to reward 1 to 2, that's it. But that's what I'm kind of seeing. And now we just wait. It's a waiting game. So yeah, let me know if you're getting this far. I appreciate you watching all the video. If you've gotten this far, let me know. Send me a message on TikTok. Leave me a comment on YouTube. If I don't reply straight away, send another one, because sometimes I get mixed up with the comments and I will reply to you. Let me know what videos you guys want. Like, I've got ideas, but if there's something in particular that you want, then I can answer that for you. And what I'm thinking of doing is, if I've got a list of, say, 50 questions, then I can answer those questions for you guys in maybe another live stream. You get what I'm trying to say? So, this is all done live. Obviously, it's not live on YouTube, but it's done live, so you can see my thinking and my thought process, which I enjoy making these videos. For me, it's great as well. It keeps me accountable, because obviously I'm not going to do anything too crazy. And for you guys, it might be useful as well if you see how my thought process works. And, that's it. At this point, it can be boring, at this point trading, because, your targets have been met. You've taken some profits here. You've taken some profits here. And really at this point, it's just a matter of waiting. So, what I may do is I may cut this recording and come back when something interesting happens, or come back when Silver Bullet starts, right? And then we'll see where we are from there. Alrighty, so we've got some interesting price action now. Let's have a chat about it. I'm going to extend that across. We're going to actually get rid of the text from here for now. We're going to create that as a purple box. Right now, we've just swept some more sell side liquidity. So every single time we sweep sell side, I'm seeing what's the reaction after sweeping that sell side. Do we continue lower? Do we automatically displace higher? Because after sweeping sell side, we know that we target the opposing liquidity, right? On a basic level, we sweep sell side, we take buy side. We sweep buy side, we take sell side, right? So I'm just watching how price reacts here, right? That's all I'm watching. And I'm watching how price reacts now that we've taken this sell side. So at these points, we've rated sell side liquidity. At this point, we've also rated sell side liquidity. So we're stepping down. We're stepping down. At this point, we took some out. Not much. So that's what I thought we'd go down lower. Rated sell side here, rated sell side here. 2 points of sell side taken out. Again, my stop loss is so far up. At this point, it doesn't matter for me. I'm happy to hold onto this contract. It keeps me stress-free and it keeps me sane, knowing that, it doesn't really matter what happens to price. The profits have been taken already. And we're just kind of watching price now. I wanted to take out this TP level, which is the consequent encroachment again of the fair value gap on the 4-hour time frame. So it's stepping down. It's stepping down is what I'm trying to say. So you can kind of see how that looks there, right? So if you wanted to enter this trade, that's really the only entries you could get, in my opinion. It didn't return here. If it did, that would have been a good entry to go short as well. Enter short from here, I wouldn't do it personally. We could continue to sell off, but we're getting very close to the silver bullet opening. And usually, there's a lot of volume and volatility. Alrighty, so currently we're playing around with this bearish gap. We came a little bit above it. We tapped in this order block, right? We came down past it. We traded back into it. So we'll see what happens. These two candles here, obviously that's, quite a bit of displacement. But again, every kind of low point that's made, I want to see broken if the trend's going to continue. So at this point, I'm just waiting. I'm just watching. And, I'm waiting for silver bullet because I know volume's going to come in at that point. When we get a bit closer, if we get a bit closer, I should say, to the TP level, then I'll move my stop loss aggressively. But if we don't get to the TP level and it's just on silver bullet, I'm going to leave it because I could get stopped out and I could miss out on the opportunity there. So that's what I'm saying. It would be nice to get some displacement past here, continually change the state of delivery and continually keep it as bearish, right? So when you're in a move down, if you're in a down move, if we displace past these two green candles, then these two candles should support price as resistance. So if we break past down here and then we displace up past these green candles, that would then be a change in the state of delivery to the upside, right? So similar to here, right? Similar to here. We had these up close candles. We had these up close candles. When we break past those, that's a change in the state of delivery. We had this big up close candle. When we break past that with displacement, there's a change in the state of delivery. So every up set of candles, right, if we continue to move down, should support price. And they're referred to as an order block. An order block is confirmed when price closes below. So this is an order block because price closed below. These are not an order block yet because price hasn't closed below yet. It could, but it hasn't, right? So that's kind of what we're waiting for and what we're watching for. I've gone through the entry model. I've gone through why I enter the trade. And if something's not clear for you or you're not too sure, let me know. I'm happy to answer those questions. But what I'm going to do, I'm going to come back, I think, a couple minutes before silver bullet, and then we'll tape read the rest of it and just see if price breaks above this candle. So I'll come back in a couple minutes and we'll make way for the next part of the video. Alrighty, this will start the next segment of the video. So I'm going to break this up into bookmark sections so you can skip to each. We're currently about 2 minutes from silver bullet. So I anticipate quite a bit of volume to come into the market and volatility at silver bullet. It's the start of a new quarter with quarterly theory, and a lot of people are trading because they know about silver bullet too. My eyes are going to these sets of lows here and these two up close candles, right? If we can displace lower, then we should be able to reach the TP. If not, then we're going to watch to see how price reacts at this zone, right? So that's where we're kind of at. This here, it was a bearish gap. We disrespected it. We came past again. We rated sell side. So we could use this again and keep trading in that to head lower. We're just going to have to wait and see. this high is important to me as well. How we treat this high, how we trade past this high. If we do, if we trade past this high with displacement, then I'm less confident in the trade. If we disrespect these two, obviously my stop loss is going to be taken, but this should be the next line of defense anyway, even with the volume and volatility that might come in about a minute's time, right? So we've got this imbalance here, this bearish one that seems to be holding price down. We've got an inverse gap here that hasn't been traded back into, and a CB here as well. This here could be treated as a mitigation block. So if we disrespect all these three PDRAs, then yeah, I'm wrong. And, you know, I've taken my profits. All good, all sweet. About 20 seconds. So we'll see what we're doing with price. Again, we'll see, you know, if we get that volume and volatility into the market. We'll see. If I am right and price is going to go lower, the market might send price up to here and then we could still go lower. Do I want to hold on and wait and watch the charts for that long? Not really. So I'm just hoping for a nice abrupt move up and then down, or then straight down. And then I can just move on with my couple seconds here. Hopefully get some volume and volatility in one direction, right? So you can see that volume and volatility at the moment past this swing low. But let's see how we close, yeah? So again, every swing low that's created, I'm marking out. This is consequent encroachment of the fair value gap. How the candle closes is important. Yeah, it's very important for me. And again, I've just chosen consequent encroachment as it's a key level of the fair value gap. And again, we've been extremely bullish, right? So that's kind of what I'm looking for. You know, at this point, you could do this with your stop loss. Like you could for sure, you could do that and manage your risk like fully and just completely, you know, do that if you wanted to. But you can see how we trade past that. And now we're trading into, let me get rid of this. We're trading into consequent encroachment there. So really nice trade. I hope you guys got something from that. And, you know, at this point, you know, that's the executions there that you can see. I'll be posting this in my Discord. For those asking, it'll be back online at the end of this week. I'm just going to fix a few things. And I'll make more videos like this so you guys can actually see this for yourself and maybe, you know, use this as some study. So until next time, guys, I appreciate all your support. I'll talk to you then.